What's up, guys, and welcome back to Rougefx. Today we are going over GBPJPY. This is going to be the second episode of a Stroll Through Infinity, a little video series I did come up with just to help you guys really understand the overall practicality of the market, as well as, it not being such a, or I should say, it shouldn't feel as such an end game to obviously experience losses. There is a very much healthy way to obviously cope with your losses, from jotting down your notes as far as what you missed and what you may have misinterpreted, as well as what you could have improved on. How accurate can you have placed your stop loss, as well as how precise you could have placed your target. There is indeed always room for improvement within these markets, within your Forex trading strategy and or concepts that you definitely implement throughout your trading career. Of course, I am definitely your guide, especially those who've been, definitely paying attention to this channel for well over 6+ months. However, it is very much important to understand that your journey is very much your own, right? If you're holding a 60 pip trade loading in blues, you're not going to turn to me and ask if you are obviously going to close that trade. No, of course not. You are going to do your best in that very time or very moments. In whichever case, be present and understand that you're going to have to see eventually what's going to happen, even if it means, taking a break even if it means taking a loss, even if it means missing a trade entirely. It is for the overall development of your trading career. Of course, I am not going to be there behind your back trying to micromanage your whole entire system. Understand that, this is a business, and what trader is very much not prepared, the next trader will very much be prepared. And of course, as you may know, or as you can pretty much tell, preparation is very much key within these markets. With that being said, please, guys, I do encourage you be responsible, be attentive, as well as accountable, right? You need to set time for your studies. You need to set time, or if anything, make a schedule, make a routine, add Forex lifestyle, no matter how small, no matter how insignificant you may feel or think it may be. Understand that, Forex trading, if you are obviously studying Forex for a living and you're trying to do this full time one day, it's going to take these hours and hours and hours of study, as well as lessons, as well as continuously rewatching material, because again, you're trying to implement this strategy in such a case where, in a way, it's very much effortless, and it can be very much made effortless if you allow it to be, right? Only way for it to be effortless is if you make the sacrifice, take the time. However case you might be feeling within the moment, understand that, in whichever case, the reality that God is preparing you or setting you up for is definitely nowhere near the frequency, the vibration, the places, the experiences that you are going, right? It is very much important to understand that, right? Differentiate between the present moment, as well as, the seeds that you're definitely planting within your mind, within the world, correlating this with karma. And of course, the way energy is perceived in general. It's just great to understand that that vision was given to you for a reason, right? You have obviously awakened to a unforeseen vision, or in whichever case, unknown future. And it is important to understand that anything that you very much imagine is very much possible, and it can very much be created with time, effort, energy, a bit of affirmation, confidence, and most definitely integrity. I do appreciate every one of you for tuning in. If you haven't already, hit that like button, subscribe to the channel, because we do aim to post very much consistently. Ring that post notification bell, because it only means you get our latest uploads. Without further ado, let's get started. As you may know, just like in episode 1, this is going to be our area window of, in a way, liquidity, but pretty much the window that we are obviously looking to see the most price movement, in whichever case, a time window, right? This is very much going to be Asian session, so at this point we're going to be going from 6 p.m. to just about 11:30, just pretty much stalking our potential setups for a pretty decent risk reward opportunity, of course, right? As you can see by the start of Asian session, price started building up a pretty decent amount of liquidity. If you definitely revert your eyes towards the left, you can definitely see that there was a actual QM or structural high, or if, whichever case, strong high that was very much established. As you can see, price took out liquidity, which would happen to be what? Equal highs. It's pretty simple. This is what our point of interest would look like just above our actual liquidity and or supply, or in this case, premium pricing. As you can see, price reacted pretty violently, rejecting any higher price movement, causing a crash in price. If you pay closer attention to detail, you can very much see that we actually have a break of structure, a break of this structural low, a break of these three candle formation, maybe even a break of a imbalance, right? An imbalance fill, but a bit of an extension, of course. I can very much label that out for you or for anyone very much confused. This imbalance price section, liquidity void, fill. However, it is very much important to obviously notice that price did eventually fail to break this low towards the left, in whichever case, this weak low. Price rallies higher, reacts pretty violently towards this POI to the left, which just happened to be a unmitigated wick and or imbalance, or really in whichever case, imbalance close price action. We get a pretty decent touch, which honestly I'm not even mad on. Like the 1 second of, I mean, this in this case this would be the 5 minute, but in the 1 second you can definitely see or understand why this price touch is so valid, right? Price retest leaves an equal low. From here, price draws down to lower pricing, retests in search of internal range liquidity. At this point, it was pretty apparent what price was looking to do. If we transfer in this case, our order flow to this unmitigated wick and or unmitigated bearish pin bar, you can definitely see how price reacted off of this initial point of interest. In whichever case, reacting towards a order block towards the left, we end up dropping towards lower pricing, definitely providing us with a choke price retest. By the time price, initially printed this pretty huge FU slash wick slash failure swing, I already anticipated that this would be used as an inducement. Of course, I very much got wicked out by this first FU candle. That is just, a lesson learned. Definitely wait for your candles to close. However, as this, or I should say the very next candle was printing, I definitely got in a fair value gap entry. It was pretty simple. All I did was draw my fib and wait for price to reach premium pricing and took my entry. Pretty simple, of course. As it is being very much understood that price is, reaching towards or drawing towards internal range liquidity, it was very much easy to comprehend that we were definitely targeting external range liquidity of this, this range, right? In whichever case, this range would really or pretty much look like a weak low, strong high. Price, printed its overall, or I should say, showed its overall hand in printing a Quasimodo, and at that point, price very much did its thing, resulting in well over a 127. Pretty simple, pretty easy trade, pretty fast trade. If anything, this happened well over, I want to say at least not even 3 hours into Asian session. It was a pretty decent trade, pretty textbook trade, and I'm very grateful for the opportunity. As you can see, maybe like an hour or two, I'm not even gonna lie, maybe I think it was at like 12, I was actually paying attention to this price action. As you can see, price was very much stalling, or it really just, came to a very much stagnant behavior. I honestly don't know if it was just the fact that, I was impatient, or I wasn't necessarily feeling like waiting, or maybe I just felt like I knew it all at that moment. But it was just surprising for me actually to come back to this screen, see how much, we very much did hit our take profit. But I mean, obviously, it seems I've been bamboozled, right? Because price very much had other plans. But it's okay, because you can very much understand at this point why price did what it did, right? Which we can definitely break down at this very moment. So as you can see, price very much printed a strong low in this case, right? Price rallied higher, failing to break this overall high, which is perfectly fine. In this case, yes, price is very much bearish. However, it doesn't mean that price has just, shifted momentum entirely. It literally just means price failed to break the previous high, which it very much makes this, liquidity in retrospect. But honestly, I very much knew that this was going to take off towards the highs. It's just, obviously my stop loss placement was very much miscalculated to a certain extent, right? What I didn't notice or see, I guess you could say, earlier today, right? Because it's very much still that day at this point in time that I am recording this video. If you look left, we can very much see a AMD pattern, an accumulation, manipulation, distribution. Below that is where I very much noticed that I had selected the absolute wrong area for inducement, and then very much paid for it, right? What's the overall rule that this industry likes to bring up? If you don't know where the liquidity is, you very much are the liquidity. Well, in this case, I very much knew where the liquidity was. It's just I just didn't necessarily understand where else liquidity could have been located, right? In whichever this case, price very much did react to our overall point of interest, which, I mean, again, I don't understand. It's something about being in the moment or on that live chart that kind of messes with your trading system or plan or any kind of, but again, it just comes with experience and obviously being comfortable, of course, in the hot seat. As you can see, price very much printed an inducement. By the time price was right here, I acted like I knew everything and obviously misplaced my stop, which is very much fine. It's okay. L very much embraced and lesson very much learned. As you can see, again, just reiterating, there's very much a pool of liquidity right here, as well as a pool of liquidity towards the left, being what? Well, there's very much an unmitigated wick towards the bottom left of this original POI. If I take this off, you can very much see. Actually, let me very much zoom in a bit, but you can see there's an unmitigated wick right there that would be used as a POI. And if we're being even more precise, you can see very much that price established a weak low. Did this specific structural low take out any kind of low towards the left? Any of them? Of course not. That makes this particular low liquidity, or in whichever case, an inducement, that very much rated anyone looking to obviously take longs from right here. It's honestly fair game, right? Very much GG. I'm coming back for actually later on in late New York. We very much got our comeuppance. We got what was coming to us, and we definitely put out good karma by practicing good trading habits and stepping back from the chart and letting very much the chart tell us what it was very much finna do, right? What it was very much looking to do, show us its hand, and then capitalizing off of its intention. We very much missed a 10% move, which is very much fine. It's okay. All it really took was a stop loss miscalculation, which in hindsight or retrospect, you can very much understand that yes, we missed 10%, but what if we settled for a mere 8%? Really think about that. What if you settled for 8%? I mean, obviously you'd still be stopped out, but okay, that's fine. What if you settled for a 5% instead, right? And this is just understanding that greed is very much the source of a lot of people's not necessarily failure in trading success. Of course not. However, it's very much a hindrance. It's very much if anything, it'll stunt your growth, right? Why? Because while you're trying to get the most perfect entry and impress, traders and people on Instagram that very much don't even honestly care about you, those who very much do this to make money instead of being right are very much taking off with a well over, I believe, 100 pip move, which anyone should very much understand how much 100 pips can change a person's life, of course. As you can see, we look left, we definitely have our weak high already labeled, of course, as well as targeted, as well as ran through. It's all good. Every trader loses. Every trader has these days where it's like, wow. However, I'm very grateful for the 7% that I very much did secure. Again, it's just about thinking in probabilities and understanding that there is very much going to be another move. In whichever case, Price continued higher. By this case, it's around 9, almost 10. I'm ready, obviously to not necessarily get my money back, but, see, or I guess you can say, look for the highest probability trade, right? I mean, of course, that's what anyone's trying to do, but let's be honest. There's a very much strategic approach that comes with actually acquiring these high probability setups, right? As you can see, price very much printed a strong low. Price, it kind of stagnated into a bit of consolidation. It was very much obviously continuing to make higher lows, but it is just very much important to understand that in whichever case, these are tiny ranges on maybe the 30-second time frames. Very much telling you this just so you don't get confused. It's literally just in whichever case, just a tiny range, just built up over an accumulative, or I should say, an accumulation of ranges within. I can very much go to the 1 minute and show you, but just trust me, it's very much there and it's very much apparent. Price obviously establishes a pretty obvious order block, in whichever case a strong low with the actual. And for those who are wondering, this is how it looks on the 3 minute. In whichever case, this would be labeled as a continuation pattern. If you don't necessarily understand what that is, it's very much going to look like this. Strong low, weak high, inducement, failure swing. We take out a major high to the left, in whichever case run liquidity towards the lows and continue the overall momentum towards the highs. As you can see, again, a textbook trade. And as you can see, very much thinking in probabilities. 4 plus 7 is well over 11-12% return on investment in the day. You notice how we missed a 10% trade. 2 trades made up for 1 trade. I'm 2 out of 3 at this point, right? As you can see, this is what I mean by thinking in probabilities and understanding that there's very much going to be a next trade. Not only a next trade to profit, but another trade to very much learn, observe, and very much appreciate, right? Because opportunity very much does not come often, right? And for a lot of people. So when you get opportunity, when there's an opportunity to enhance your overall lifestyle, I appreciate each and every one of you for tuning in. This has been a Stroll Through Infinity. Before I do go, one-on-one mentorship sessions are very much welcome and or encouraged. Also, our subscription-based membership is very much available for those looking to enhance their trading potential, as well as adapt to a new and improved rule-based trading system. Until next time on Rougefx, y'all have a great night.